All right, welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today is Sunday the 22nd, 2023. This is our live stock market meeting that we do every weekend, that we like to go over events that are scheduled to happen this week, as well as certain activities. So one of the most important things that's important that we do as part of our weekend due diligence is to always look at what is going to have the biggest impact on the stock market first. So we always like to start from the top, kind of work our way down to the bottom. So when we try to figure out what has the biggest impact on the stock market, really it's economic reports. And there's a lot of great economic reports that are scheduled to happen this week. And so again, it's always important to know what's going to happen before it happens. And I'll show you just how to do that. Now, there's a lot of different websites that can provide economic reports, but the most popular one is going to be the Investingcom website, and it's an application that you can download from your app store, and it's completely free. You don't have to pay for any of this stuff that we're going over, but looking at it on the website, you have to go click on your little calendar icon on the top and make sure you have the economic calendar selected. If you're on your mobile application, click the calendar icon, and then there should be a drop down menu of what kind of calendar, and then make sure you pick the economic calendar. Once we're on the economic calendar, we'll want to click on this week. That way we can see everything that's scheduled to happen for this week. Now, we're going to see, it's going to look like a bunch of gibberish at first, but we need to try to clear it up a little bit. I'm going to explain how to decipher it. Now, we want to click on filters because we need to clear everything just by clicking on clear. There's only two things that we need selected, and that is a check mark under the United States, and then under importance, you'll notice there's a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because what we're telling this system is that we want to see everything that'll have the biggest, the most important major economic reports for the United States. And so when we click the refresh, now it's going to show everything that'll have the biggest impact. I'm going to try to enlarge my screen a little bit so you can see a little better. So typically we normally see these events scheduled for Tuesday, Wednesday, and a Thursday. We don't normally see these scheduled for Monday or Friday, but it does happen. But it's interesting to see that there's no major economic reports scheduled to happen for the first 2 days. So there's nothing scheduled for Monday or a Tuesday, because it's going to be kind of like the calm before the storm from what it looks like, because the biggest major economic report is going to be on Thursday. And how we can tell that is because the more rare the economic report is, the more of an impact it's going to have on the stock market for that day. What I mean by that is that there are weekly reports that happen every week. You know, those aren't going to happen. Those aren't going to have that big of an impact versus a monthly report or a quarterly report or a yearly report. Because like a quarterly report, for example, this Thursday we have a GDP report, which is a quarterly report for the fourth quarter, and so that only happens once every 3 months or 4 times a year. So that has the biggest impact on the entire stock market. So just know Thursday is going to be a very, very volatile day. But crude oil inventories for Wednesday, January 25th is a weekly report. Most of these reports, the numbers need to be up, but there are 2 reports that need to be down. For example, the crude oil inventories and the initial jobless claims, which is the unemployment report. If these numbers are down, for example, the crude oil inventory levels, if they're down, that means people are driving, they're flying, they're spending money. That helps the economy. Versus if they're not, then crude oil inventory is just going to build up like it did, like the report did last week. Or unemployment. If unemployment goes up, and people aren't working. If unemployment goes down, that means people are working, they're paying taxes, they're shopping. That helps the economy. But with the crude oil inventory levels, what we're seeing ever since they went up way above their average, we're seeing that most Americans are getting paid every 2 weeks, and they're filling up at their favorite gas station and trying to make it last for 2 weeks. And so we're seeing this pattern where the crude oil inventory levels are really high 1 week and then they're really low next week. So this week is forecast to be low, which means it's going to be bullish. So, but it's also important to know the times of when these reports are going to be out. That way we know if the report is going to be bullish or is it going to be bearish. I mean, well, during the pre-market, or is it going to be after the stock market opens? So when we are looking at it on the website, it's automatically going to default to the Eastern time zone. But if you're looking at it on your mobile application, whether it's your tablet, your phone, it's automatically going to pick your time zone. So it's important that you know whether it's going to be released before or after the stock market opens. So in this case, since in Eastern time zone, the stock market opens at 9:30 a.m., this means that the crude oil inventory levels will be scheduled to be released 1 hour after the stock market opens. And they time these events precisely like the way that they want them early in the morning, because the first hour and the last hour of the day are the most volatile times of the day. That's the most trading activity, because we see a lot of buying and selling activity right after opening, as well as right before close, as people are repositioning things or whatever, getting ready for the next trading day. And so after the first hour, usually we may see a little loss of activity. But when we have an economic report like this, especially 1 hour after the opening, that means it's just going to keep more activity going, more volatility. And so, but this is looking like that it should provide bullish activity. So now that we kind of have clarified, yes.
Sorry, quick one. Are we on Thursday yet, or are you still on Wednesday?
We're on Wednesday, but we're going into Thursday right now, and we can see that there are, like I said, these are major economic reports that are going to have a huge impact on the stock market, and we can really be prepared for this. Like if you're pretty skittish on straddling or whatever, I mean, Thursday is a prime example that we need to straddle that day, because the stock market can go either direction really on that day. But I'm thinking it could be I don't know, it's interesting because there's some mixed signals here, but I mean we would definitely want to straddle, because like I said, it can go either direction and significantly. And to try to decipher this, again, we have 3 major economic reports that are scheduled to be released 1 hour before the stock market opens, and then we have one 30 minutes after the stock market opens. And if you're not sure what these reports are, and these are pretty repetitive, so they do come out regularly, but if you don't know what they are, I encourage you to click on them. A new page or tab will appear, and it'll provide you exactly what it is, and down below how it affects the stock market or the US dollar. For example, the core durable goods orders measures the change in the total value of new orders for a long-lasting manufactured good, but excluding transportation items. Because aircraft orders are very volatile, the core number gives a better gauge of ordering trends. A higher rating indicates an increase in manufacturing activity. A higher than expected rating should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. Unless we need the US dollar to be lower, then that is when we can see an opposite effect. But the majority of the time, though, we need to just follow, the normal rules. And by looking at this, we can see that the core durable goods orders, and how we can decipher whether this is going to be bullish or bearish, is to compare the forecast with the previous. Is the forecast going to be greater or is it going to be less than the forecast? So for example, the previous was positive 0.1%. The forecast is predicted to be negative 0.1%. So that means it's going to be predicted to be bearish report. And this is a monthly report, so that's a pretty good month, a strong economic report. But then the biggest one out of the whole entire week is the GDP report. This kind of helps measure our inflation and whatnot. And I'm just going to kind of show you the inflation level historically. So
I was just wondering if anybody can see Carlos's screen sharing.
Yeah, you gotta pull it up.
I see it, yeah.
Yeah, there should be a setting or something within your screen that you can pull to view video feeds or video screen.
Yeah, mine's just loading.
You may have to try to get out and then go back into it.
Okay.
Maybe glitching.
Thank you.
Yeah. So the GDP, which is very interesting to see, and let's go back to see if we can see before the government shutdown and everything, or the economy shutdown. So let's click on show more. So before when the government shut the economy down, we were normally right around 2 to 3% for our GDP. And so, but when they shut the economy down during the let's see here, what was it? It was during the second quarter, so that was right around here. That is when we saw a significant drop because inflation had dropped significantly, and then everything kind of spiked back up. Looks like we're in that negative 30% to 30%, and then it just kind of went up from there to 4 to 6%. And it's just been really, really volatile. But they say if we're in a negative GDP for 2 quarters or 6 months in a row, then that means that we are in a recession. But and so we kind of were there for a moment, but then we kind of normalized a little bit up here in that 2 to last one was 3.2%. And so just not exactly sure, what we're kind of thinking now, but forecast wise, they're thinking it's going to be lower, 2.6%. And so that may try to achieve, the government's goals and the economy and whatnot. So I'm thinking this could be a bullish report. And so, but then we have the unemployment report, which is expected to be up higher. It was pretty low last week, which is very interesting to see how, to see all these layoffs, Microsoft and Facebook, all these, out of everyone, and we've probably seen hundreds of thousands of layoffs, but unemployment continues to fall. And so that's not part of the government's plan trying to create this, recession or trying to crash the, stock market or the economy and whatnot. But yeah, it's just very, very interesting to see. But like I said, the major one's going to be the GDP. But then we have the new home sales, which has been, pretty small, but it's been fluctuating right around about 500,000.
Let's see if you should go on mute.
Yeah, I don't know who. Let me try a couple different ones.
So Carlos, looking at GDP, I see if can you go on mute.
Yeah, no, I just fixed it.
Okay, cool. So looking at GDP and jobless claims, so it seems like both both are actually bearish. Looking at them from our instinct with GDP going down, jobless claims going up. Last month on the GDP, the forecast was actually bullish. The jobless claims were going down, so it was also bullish, and the markets rumbled. So last month we had a good news is bad news type scenario. This month, it seems like we're forecasting to be higher, so to be lower. So we're getting an opposite reaction. We're having a bearish outlook. Are we expecting it to be an opposite effect again? That this time it's going to pump.
I'm thinking so. Because we have to think like, this is all part of the government's plan. Last meeting we talked about the economic cycle. I'm going to pull up one of the images. I have to upload it really quick. Just to kind of do a recap with some of you guys new to the meeting here. I'm going to pull up this really quick because we went over it last week. Now everything has a cycle, just like our weather. We have with the summer, spring. Everything has a cycle, including our economy, our stock market, and cryptocurrency has its own cycle. Now, our economic cycle is typically around 10 years, give or take, 1 or 2 years. So it could be 8 years, it could be 12 years, just depends on, who's kind of running the show. But typically it averages around, every 10 years. And if you notice, every 10 years, we have some kind of recession there because it's all part of the plan. Now, right now, we should be right around the market bottom. So we should be here in the bottom left of this image here. And so that means that we should be soon beginning our bull market soon. But you'll notice as the stock market begins to rise, the rest of the economy is still falling. We're still entering this recession because, the government's still increasing interest rates. People aren't buying homes, they're not buying cars. And so, the automotive industry is the United States' backbone for the economy, as well as the real estate. And so if you have, the backbone of the economy, kind of crippled, we're going to be, doing this while the stock market is getting ready to do this. And so, but it's interesting, as long as you are aware of the cycle, you'll know what to start to buy into or to even to sell. Just depends on how well you know. And I've uploaded several different stock market cycles that helps provide us a lot of information, what to buy, what to sell, and what's kind of going on and when and whatnot. But this is kind of a user friendly idea. And it's, like I said, once the interest rates have peaked, you'll notice that which is going to be pretty soon. It should probably start in the second quarter. And so then the rate should be kind of neutral there until probably next year. Then the government will start easing interest rates, meaning they'll start lowering interest rates. But it's saying now is pretty much a good time to start buying technology stocks, finance stocks, cyclical stocks. But once we start getting into the full bull market, which would be probably right around spring or summertime, it's still saying to continue buying technology stocks, but now industrials and basic materials and so on. And then look at this with the market top. Once the market tops out, then it's saying to continue buying your basic materials and then energy. And energy would be like oil and other things, because especially the stock market typically has it's a yearly cycle. And so normally 6 months the stock market goes up, then the next 6 months it goes down. And so we can always sell our technology stocks towards sometime in the fall, and then we can switch over to energy stocks like oil and stuff, because energy does very, very well during the winter time. As you can see, we had a massive winter storm. We talked about Russia and Ukraine with their energy crisis and whatnot. So energy has just been a very, very valuable thing, and it's even more valuable during the fourth quarter or the winter season. So that's where we can kind of position things. And you can, if you're employed with a company and you have a 401k, you can still move your 401k plan around to maximize your gains. I mean, imagine making 20 or 30% every quarter on your 401k. Most people gain what, 3-4%, if that, or lose 3 or 4%, every quarter, if not more. And so, but by knowing what's going to happen before it happens is so critical, and that's one of the things that I absolutely preach a lot with our group here and our meetings. And so, going back to the economic reports, yeah, again, the new home sales, we should continue to see it kind of decline, but it's interesting, month over month though. We've noticed that used or existing home sales have gone down tremendously, but we've actually seen, I don't know if new home sales provides a history, but yeah, it does. So, but we've actually seen new home sales go up, and so I would imagine, especially with inflation of things, it seemed like it's probably more cost effective just to build a brand new house than to buy an existing house. Due to the inflation and the rising costs of that, it just seems like it just makes more sense. And that's where we can see how the new home sales have actually exceeded over the forecast several times in a row, 4 times in a row. So will it do it again on the 5th time? I mean, they're thinking it's going to be much lower, but they've always thought that. So, but is it going to be higher than the previous? I don't know. That was pretty high. I don't think it's going to beat that. But even if it falls in between the previous and the forecast, that's still considered bearish because it's still below the previous. And so, but if it's lower than the forecast, then we can consider that even more bearish characteristics. So I'm thinking that the new home sales have got to be bearish, especially with the used homes. I don't know if you guys gotten your Zillow report lately, but a lot of homes went down 3-4% last month. So homes are really depreciating very, very quickly, and so so maybe we may see existing home sales start to go up. But I doubt it, especially with the interest rates being that high. So this is going to be very, very interesting. But I would say overall we're going to see some mixed characteristics throughout this day. But the GDP is going to dominate Thursday, and I would say it should be pretty well bullish. So. But so far, we're seeing a lot of bullish days. Wednesday, Thursday is looking pretty bullish, but Monday, Tuesday, we'll look into that. Sometimes the market needs to be down before it can come back up, and so Wall Street and all these hedge fund companies, they know this, so they may manipulate the market so that way they can get it as low as possible. That way they can buy low. That way, as the stock begins to surge up these days, they can benefit from it. So, but we have to make.
What happened last month? Sorry to interrupt.
No worries. No, that's fine.
Before the GDP report, they pumped the market, and they even gave us a little gap up in pre-market before it started tumbling. And when the report came out, and they kept crumbling it open. So I would love to see the market drop on Wednesday. That would give me more assurance that we may be getting a good news is bad news kind of scenario.
Yeah, definitely. No, I'm glad you brought that up because, and remembered last month too, because, that's why it's important we kind of get together and talk about this. That way we can figure out exactly, what's going to happen before it does. And so, but yeah, it just seems like it's kind of planned out. It's scheduled to be, to do this, but in the opposite effect. But we're in a new quarter, we're in a new season, and this we're in a winter season, but we're not too far off from the spring. But the springtime is usually that transitional phase where we go from the bullish or bearish market into the bullish market. And so it just seems like it's starting to happen a little sooner, because we've been in a pretty long bearish market for longer than usual. And so it just seems like the market is ready to begin to trend upwards. And we'll take a look at some moving averages, because we can kind of see it within the the price lines and everything. But going into Friday, we have the core PCE price index for the month of December, but we also have the pending home sales as well. And we do see that for Friday morning, 1 hour before the stock market opens, that this report comes out. But it's scheduled to be a little higher. I mean, it's forecast to be a little higher at 0.3%, where the previous month was up at 0.2%. But then we have the pending home sales, which still looks like it's going to be down, but not as bad as before. And so, but this may provide some more bullish characteristics. And so, and you can always look ahead too for the next following week, but it's important to continue looking at these regularly, because there may not be a forecast just yet. Or they may also throw in more economic reports as time goes on. And so, but that's why we need to stay focused for this week. And so this looks like it's kind of the the gist of the characteristics but we need to look at the earnings, because the earnings is also going to be a huge part of the volatility for this week. I always save our earnings information and analysis in our featured and announcements area of our group. So if you click on featured, it'll provide you with a lot of the reports, and so including the schedule for this week. And like I said, there's a busy schedule for this week, and sometimes one company can affect others. And so it's going to be crazy. Some of the big names that we're seeing here is like Verizon, Microsoft, Boeing, Tesla. Tesla is definitely the number one there, and it's some airlines such as American Airlines, Southwest. Then we have a semiconductor company like Intel, and some other energy companies like Chevron. And so, but they all provide information or information with their release information, like if it's before or after opening or close. But the analysis I'll post usually on a Saturday and a Sunday. For example, Tesla is scheduled to release their earnings on Wednesday after the stock market closes. The company's earning release has a 37% expecting earnings beats. That's probably one of the lowest I've seen for Tesla in a long time. And so, but option traders are pricing in some pretty gnarly movements at right around 9.7% in either direction. So, but this also means that 9.7% has a 37% chance it's going to go up, but it also means it has a 63% expecting an earnings miss. So that there's a 63% chance that it's going to go down 9.7%. But either way, everyone's still trying to debate whether this should be straddled or not. There's always a limitations. Every trader and investor has certain rules, of what stocks to trade and this and that.
Can you please make my coffee, honey?
Say it again. Can you say that one more time? Anyways, but maybe our rule for but also if you're doing options on a earnings, then we definitely need to make sure that we are aware of implied volatility crush, also known as IV crush. In case if it doesn't work out, meaning where it doesn't move at all, it's going to crush both your calls and puts at the same time. It can devalue at 20%, it can devalue at 40%. I mean, it's a crusher. And so we have to be, we've got to try to be more certain that it's going to do what we need it to do, but also as a lottery play, meaning where in case it doesn't work out, we need to invest lightly on it if we're going to do it at all. and so that we never invest heavy into it, because we invest heavy into the ones that we are more certain about. And so, but on something like this, earning play with implied volatility crush, it's never certain because of manipulation. Manipulation can easily affect it at any point in time. But in case things don't work out, you invest light. But if it does work out, you're going to be rewarded pretty heavily. Because if it does move, 9-10% in either direction, and you're straddling, that should be profitable, very, very profitable. But if it doesn't move, like usually beyond 3-4%, then or even 5%, depends on the stock, then it could be a wash, or it could be a slight implied volatility crush. But 10%, that's pretty good. I would say that would be worth taking the chance. Because high risk, high reward. If you're looking for a lottery play, because we have our regular plays, our regular straddling. I'll post our regular straddling rules here really quick. Let me find it here for you really quick, because like I said, it's really, really important that you understand every part of the guideline. And let's see right here. Okay, so rule number 1. So this is for our majority of our plays. Our main strategy is to always straddle. Never have a call without a put. Never have a put without a call. And so rule number 1: always straddle heavy on the top 3 stock options. If you don't know where to find the top 3 or stock options activity, we'll go over that here in a little bit. That way you are aware of that. Rule number 2, people always ask, what strike price should I pick? Well, rule number 2 is always the strike price is always at the share price, meaning always at the money. You never want to be too far away from the money, because if you are far away from the share price, then you're going to suffer a lot of time depreciation the longer you hold it. So rule number 3, it says always the soonest expiration date for the most volatility. Because if you have an expiration date that's pretty far out there, whether it's weeks or months, not only is it going to be more expensive, but it's not going to be that volatile. So if you're straddling with a pretty far out expiration date, you may gain some in one area, but you're going to lose some in the other. It's going to be a wash pretty much the whole time. So it's going to be harder to profit or to gain from it. Because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So in a very volatile situation, you may lose 100% on one side, but you just may have gained 500% on the other side. So what we're trying to do is wash out the loss on the other side by having a significant gain on the other side. And the only way to try to do that is by having your expiration date the soonest for the most volatility. Rule number 4, buy straddles within 15 minutes before close to sell the next morning within the first hour. So, and the reason why is because, most people don't have day trades because their accounts are under $25,000. And so when we buy our straddles 15 minutes before close, we're preparing that for the next morning. We sell it during the first hour because that's the most volatile time of the day. So usually at the end of the hour, the stock market has already moved significantly. It's already picked a direction. It's already moved a significant amount, either up or down. And so, but if you're more of an advanced trader, then you'll be able to utilize moving averages to sell those calls and puts at different times to maximize our gains on one side and minimizing our losses on the other. Sometimes we can turn that loss on that other side into a gain, so we can gain on both sides depending on what the market's doing. But if you're a beginner, then I just encourage you just to do, sell it at the same time. If it doesn't work out, then most likely you're going to be at a wash. Whatever you've gained on one side, that's pretty much what you've lost on the other side. But we're trying to get those very volatile times, just like we know that Thursday is going to be with that GDP report. In that case, the straddle, that should be a win-win scenario for straddling, because the whole market should have moved several percentages in either direction, most likely in upwards direction. And so your gains in the calls will definitely outweigh the puts. Now we can go a little heavier more on one side over the other, and I'll kind of show you how we can kind of decipher that, meaning where maybe we can go 60% more on calls and 40% on puts. Always follow the money, and I'll show you here in just a little bit how we can do that. It says rule number 5, avoid earnings and splits. And the reason why I say that is meaning avoid earnings, heavily. So for example, if especially if like Apple or Tesla is doing earnings soon, and they are normally on our top 3 most active stock options, then we want to avoid investing heavy on those and focus on the other top ones more heavy that don't have earnings. And so because we want to avoid the possibility of an implied volatility crush, we still may want to take advantage of the situation, but just lightly, because of the high risk, high reward. If we're doing it without an earnings, it's more of a low risk but high reward. So we want to keep that way for the most part. Now, rule number 6 is avoid straddling through the middle of the day to minimize time depreciation. Again, usually after that first hour, the stock market has already reached its high point, and it's usually going to fluctuate around that. So if you're holding around that, all you're doing is holding on to it throughout time depreciation. So we're trying to minimize that time depreciation. That way, right before close, we buy back into it, and without a gain or a loss, because we're preparing for the next trading day on the next day. And these are considered a swing trade. So we have unlimited swing trades, no matter how much is in your account. So versus
whatever that thing is. And you have milk into it.
So versus the day trading, most people have only 3 day trades per 5-day trading period. And so that's why it's really important to straddle our as a swing trade. And so let's go up to the next one. Microsoft is scheduled to release their earnings on Tuesday after the stock market closes. The company's earning release has a 46% expecting an earnings beat. That's nearly 50-50, so we're just not exactly sure which direction that it's going to go. But option traders are pricing in around a 5% price movement, which is a little more than average. Boeing is expected to release their earnings report on Wednesday morning before the stock market opens. The company's earning release has a 65% expecting an earnings beat. Option traders are pricing in around a 5% price movement in either direction, and Boeing's been pretty active with their business, whether it's good news or bad news, but most of it's been pretty good news. Verizon is expected to release their earnings on Tuesday morning before the stock market opens. The company's earning release has a 68% expecting an earnings beat, which is pretty good. Now, normally when we look at this stuff regularly, usually 65% is average. Any more than 65% is considered above average. Any less than that is considered to be below average. We've seen a lot of below averages lately, but some are expected to be a little higher than that. Option traders are pricing in around a 4 to 5% price movement with Verizon, which is definitely above its average. Now there's also Johnson & Johnson, and a picture can say 1,000 words. Sometimes people, when they hear Johnson & Johnson, they may think of those COVID flu shots, or maybe over-the-counter products. And so, but as inflation has kind of hurt, things, people have been maybe buying more generic products or whatnot. And so, this is a consumer, item that that is in pretty much every household. So you can see that just by looking at this. But Johnson & Johnson is expected to release their earnings on Tuesday morning before the stock market opens. The company's earnings release has a very low 43% expecting an earnings beat. Option traders are pricing in around about a 2.5% price movement. Usually Johnson & Johnson doesn't move much, but this is expected to move a little more than its average movement. Lockheed Martin, most people wouldn't know exactly what Lockheed Martin is by, it sounds like someone's name, but by looking at the picture, you can now see it's one of our defense stocks that helps build a lot of things for our military, as well as a lot of these deals that's going on with the with Ukraine, providing them a lot of equipment. Some of that stuff may be designed and built by Lockheed Martin. Who knows? Unless we do a little bit more due diligence, but Lockheed Martin is expected to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 57% expecting an earnings beat, while option traders are pricing in around a 3.8% price movement in either direction, which seems like it's been a little lower than recently. Halliburton, another energy company, they are expected to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 55% expecting an earnings beat. Option traders are pricing in around a 5% price movement in either direction, which is more than twice its normal movement. So energy is going to have a kind of an interesting volatility this week. But then we have Baker Hughes, which is expected to be released tomorrow morning before the stock market opens. The company's earnings release has a 53% expecting an earnings beat. Option traders are pricing in around a 6.5% price movement in either direction, which is about 50% more movement than what it normally does. Then we have General Electric, which is expected to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 45% expecting an earnings beat, which is not good for General or GE. The option traders are pricing in around a 5.5% price movement in either direction, which is a little more than its average. Then last but not least, we have AT&T, which is expected to release their earnings on Wednesday morning before the stock market opens. The company's earnings release has a very low 29% expecting an earnings beat. Now, what's the opposite of some of these? So the opposite of 29 would basically be the 30. I mean, it would be our 71% expecting an earnings miss. That is really, really bad for AT&T. Option traders are pricing in almost a 5% price movement in either direction. So we'll have to kind of look at the options activity on some of these as we get closer to the week to see, are investors bearish or bullish with their investments. Now, when we do our due diligence, it's important to also to refer to the Investingcom's article, their weekly article that they always post, the top 5 things to watch in the markets in the week ahead. Just in case we miss something, they may have caught it for us and provided some information on it. But when we do our due diligence, normally, we pretty much have a lot of this information already. Now, the standoff over the United States debt ceiling looks likely to loom large over the financial markets as earnings season continues. Markets will get an update on the United States fourth quarter growth, which is expected to remain solid despite more recent signs of a slowdown. The Eurozone is to release the PMI data, while inflation data from Japan will also be closely watched. Here's what we need to know starting our week. The number one and most important thing that Investing.com is saying is the debt ceiling standoff, where the United States government hits its $31.4 trillion borrowing limit on Thursday amid a row between hardline Republicans and President Joe Biden's Democrats over rising the country's debt ceiling. The House Republicans wants to cut the government spending before they will approve all higher ceiling. A similar demand in 2011 prompted S&P to cut the United States credit rating for the first time and caused chaos in financial markets. It should put around the world. The high-stakes deadlock is widely expected to last for months and could come down to the last minute as each side tests the other ahead of June, the date beyond which the Treasury will likely have exhausted the emergency maneuvers to stave off default. From both an economic and financial perspective, a failure to raise the debt ceiling would be an unmitigated disaster. So number 2 is the tech earnings, which we've talked a lot about, Microsoft and Intel, Tesla, but they're also mentioning, Google or Alphabet. Said Friday is cutting, about 12,000 jobs. When we see, these companies, cutting jobs, a lot of people that don't quite understand look at this as bearish information, and it may provide a slight, bearish characteristic at first, but this is one of those bad news is good news. What a company's biggest expense is its staff, because it has to pay its staff, each person thousands of dollars every month. It could be $5,000, $10,000, especially Microsoft. I think the average employee makes $10,000 a month, and so if they cut 10,000 jobs, Microsoft is saving a lot of money, and that goes towards their revenue. So that helps manipulate their revenue, their next earnings season. And so this is a good news thing. So when you see job cuts, that's good news for the company. So number 3 is the economic data, which we talked about, and then the Eurozone is the number 4, where we have several European central banks officials are due to make appearances before the policymakers to enter their traditional pre-policy meeting blackout period on Thursday. The European Central Bank's next policy meeting is going to be on February 2nd. And so that's going to provide some mild, but, and then it says number 5 is the inflation watch, where, it looks like they're going to be talking about, Japan and stuff, but ours is pretty much going to be the GDP report. So that is the top 5 things there, and then the next thing that we need to talk about is the options activity. Now, most of the information we get our options activities from the barchart.com website. Under options, we always look at the most active options first. I kind of call this our radar. It is a type of a screener or a scanner, and but this helps provide us information of what people are doing. Rather than looking at social media, a lot of times people will post on there, I got $1,000, $10,000 or whatever, where should I put my money? Part of our rules and our guidelines is to always follow the money, always follow the activity, and typically it's always Tesla, Apple, and Amazon for the majority. But you may see other things down below too. And this is always sorted out by options volume, and volume is always the current day's buying and selling activity. Now you'll notice with our little radar here, you'll notice here on the right area we have a put and call percentage ratio. So this is basically Friday's activity, and this does update regularly about every 15 minutes throughout the day when the market is open. So that's why it's imperative that you bookmark this website and you utilize it for your advantage, because it also tells us not only where people are putting their money, but are they betting that if the stock is going to go up, or are they betting the stock is going to go down? So look at the majority of it. We can see that both Tesla, Apple, and Amazon are all nearly right around 60% calls and 40% puts. So for straddling, we can also utilize this for straddling information on if we should be more heavier on one side over the other. because the rest of the world is. The rest of the investors, especially 3 million in options volume with Tesla, are betting 60% that Tesla is going to keep going up, and 40% that Tesla may go down on Monday, and so, or at least within the current day. But we can also look at it for unusual activity. There could be something like this, where we can see with Luminar Technologies, or laser, LAZR, we can see that it's currently at $6.13, and it's not normally on this list. And we can consider something that's not normally on this list as unusual activity, because it's not normally on this list, and all of a sudden it is. There must be a reason. Now, not only is it on this list, but with it's an unusual amount of volume, but out of this volume, almost 83% are betting that Luminar Technologies is going to continue to go up. Why is that? So we can do some research on it, for homework or whatever. But just to let you know what Luminar Technology is they are a laser radar technology, which is actually kind of imperative when it comes to self-driving vehicles or autonomous. Because right now, autonomous vehicles pretty much uses cameras for vision and radar. It's a sonar radar, which means it uses sound waves. It bounces off. It's cheap. Laser radar technology is a little more expensive, and once it becomes more cost effective, then the automotive industry and Tesla, whatever, will probably begin to start using it, because right now we have a price wars kind of thing. We just have Tesla that lowered their prices to try to meet the government's tax credit standards. And so by adding more technology into something, it's just going to increase the prices. So it doesn't make sense yet to do it, but it may be something later on that may be implemented with other brands, especially like electric vehicle, maybe semi-trucks or whatnot. But this is going to happen one way or the other. It needs to, because self-driving autonomous needs laser radar, because it's a lot more precise. It shoots these little laser beams around. You can't see them, but it helps detect using a depth perception. It's more instant. It knows, it's able to detect better what the obstacle is, or person, or maybe it's an animal. But again, we can look at a lot of these percentages for what people are betting. Not so much what they're thinking it's going to do, but what they believe it's going to do, because they're putting their money on the table for it. I mean, they're investing into it. Now, there's another area here. It says option volume leaders. This provides us information on the most active individual calls and puts. But when we're looking at it on a Friday or during the weekend, a lot of these have just expired. And we can look at that either by the date or the DTE, which basically means the days until its expiration. So if it says 0, that means it's already expired and we need to avoid it. Don't pay attention to anything that's already been expired. So we need to go down to the next one that's currently active. And I'm surprised to see it's the laser, the Luminar Technologies, which is currently at $6.13, but we have a couple $7 call strike prices. Now, even if you're not into stock options or don't want to be into stock options, you can still utilize this valuable information to determine where people are betting that these stocks are going to go. So if you buy shares of Luminar Technologies at $6 and it gets to $7, you just gained a good amount. Like 15% just by holding on to it in a very short period of time. People are betting that Luminar Technologies is going to get to $7 between 1 to 2 weeks. 7 days to 14 days. Now we can look at this. Now we have open interest and volume. Now, if you're not into stock options, open interest is going to be new to you. So open interest is basically the total number of open contracts that have been traded but not yet liquidated via offsetting trades. That basically means, to simplify it, that people previously, from the current trading day, bought but they did not sell. But look at this pattern. We can see that 93,000 people bought, were holding, but now we see 92,000 in the current volume. Now, sometimes it's hard to determine whether if it's buying activity or selling activity. Now, with my rule of thumb, usually if it's below the open interest, I'm just going to always assume the worst case scenario, okay? So if it's below, just imagine it's all just selling activity. If it's above, then it is pure buying activity. So for example, look at this. So with the $7 call strike price that expires this week on Friday, we can see that the volume basically meets the current open interest, but with the other expiration date that expires 2 weeks from now, February 3rd, we can see that the open interest was nothing. It was absolutely nothing. Only 397 people were holding onto this $7 strike price, but now we see 101,000 all of a sudden bought into it. That is a tremendous amount of highly unusual buying activity because it had no interest and now it's got a lot of interest. So to me, it looks like people dumped this and bought this. They extended their time because maybe they believe it needs more time. So rather, if Luminar Technologies isn't going to move quite that much here in the next couple days, maybe they're wanting to avoid time depreciation, but they want to continue holding just in case. So they extended their amount of time. They sold and then they bought into this one. That's how I'm kind of seeing it. So that's just kind of a neat little example. And then there's another one here. It's a $6.50 call strike price, but it also expires, this week. But we're seeing that same type of dilemma where we see the open interest was 47,000 and now the volume is at 46,000. So it just looks like they just kind of, but we'll have to take a look at it, tomorrow. Maybe it's going to accumulate. Maybe they just bought more and then the open interest will continue to rise. If not, if they sold, then tomorrow the open interest rate or the open interest should decrease. Now, if you are one of those that cannot, monitor the stock market throughout the day, no matter what's going on, and you have to hold longer, then I recommend to sort this page out by open interest. So if you click on open interest, it'll sort it out by the highest open interest, but now we need to refresh the whole entire page to get, to maximize it, because now it's going to refresh the whole entire system with the highest open interest. So we can see that AMC has pretty well dominated the open interest. AMC is a very manipulated stock, just like GameStop. A lot of people think that it's going to keep going up 10, 15, 20, whatever, because that's probably where their cost is. But people will keep, people will try to keep AMC alive no matter what. But we can see, just like our last meeting last week, there was a lot of people betting against AMC. There's a lot of puts. AMC is currently at $5.52. What was it last week? Like $6.50 or something? I can't remember. But now we can see that it is now in the money with this $6 put strike price. But we even have a $2 put strike price. I remember right when AMC and GameStop was manipulated, back then, that they were penny stocks and they were being pumped up. We saw the activity here. We saw these crazy strike prices before they were intercepted by new regulations, and but we can see just how bearish these investors are. They're betting pretty heavily that AMC is going to keep going down. And we're seeing accumulation. We're not seeing a lot of volume on a daily basis, but we're seeing the open interest rise on a daily basis because people are buying and accumulating these puts. Now, American Airlines, which is currently at $16.34, that's pretty up there. That's up there for American Airlines. But we have a $5 put strike price. Now that we're out of the holiday seasons and whatnot, people probably aren't traveling like they were during the holidays, because the holiday season is over. But it's interesting to see just how far out this expiration is. 2 years from now, my goodness. But if you're looking for to invest into something, whether it be like like shares, you want to look for calls. For example, Starbucks, which is currently at $105, we have a $115 strike price. So if you bought shares of Starbucks and it reached $115 in 55 days, you just gained 10%. And so, always follow the money. That's part of our guidelines, and that can mean a lot of different things for different strategies. And this could be one of the strategies you can utilize for your benefit. But yeah, just kind of continue. But as we get more into our the bull season or the bull market, you'll notice there will be more calls that will be on the top here, because people are going to want to be more prepared for it as early as possible. But like I said, we're just kind of right in this transition of it happening soon. And so, but like I said, this is a lot of great information you can kind of utilize. But let's look at some of the moving averages and the graphs. Let me fix my screen here. Let's take a look at Apple on the daily chart. Let's go the last couple months. Let me get that, and then let's go even 6 months.
Hello?
Yes.
Hi. Is this a live video? Because I can't see.
Yes, this is live. You, within your software, you should be able to load the video. If it says, if your video is still loading, there's probably a glitch. You may have to get out and go back in, and it should load after that. But you should find the video feed, because it's very, very critical.
Okay.
And if you've missed a lot of this important meeting, because we've been doing this for about an hour, this will be uploaded to our YouTube channel. That way.
Awesome.
Yeah.
Awesome. Okay, I got you.
Yeah, and that way the whole video will be on there too. That way you can watch it. But yeah, it's very important.
Okay.
This is something we do every week. But right now we're kind of looking at moving averages. With Apple, we can look at some other things too. But I just wanted to show how the market is beginning to move upwards. And we can see that the price line has cut through all three major moving average lines and is trending upwards. It's bouncing on these moving average lines. And we can look at a lot of different things. Let's take a look at Tesla as well and see, because it's important to look at the top three major, and even with Tesla, is doing the exact same thing. The price line has cut through the three moving average lines, and it's bouncing upwards. It's trending upwards. Next one is Amazon. So we did Apple, we do Apple. Yeah, Amazon was the other one, so then Apple. Yeah. Okay, so yeah, Apple is trending upwards. I just want to do Amazon just in case we missed that. Yeah, so Amazon doing the same things. All three major ones are basically, trending upwards, which kind of goes back to the economic cycle that I was showing you guys earlier today, where we were basically here at the market bottom. This is where we are. So, and this is saying it's time to buy finance stocks, technology stocks, and cyclical stocks. And so, but you'll notice as the market begins to recover or trending upwards, our recession is going to continue to get more aggressive throughout the year. And so people are going to get really confused, because they think that both of these should be happening at the same time. If the recession continues to get aggressive, the market should also be more bearish. No, it doesn't work that way, because investors know what's going to happen before it happens, or Wall Street and hedge fund companies. So they get prepared and they start pumping the market up earlier. And so that's why it's important to stay focused and to keep this in mind, because out of sight, out of mind. all these stuff I highly recommend downloading. Print it out, have it on your device, make sure that you memorize it, because it's only going to benefit you tremendously. The stock market has yes.
Where did you get this sector rotation photo? Like, I wanted to read more into it.
Over time, when I created this group about 5 years ago, I've just met with so many different pro traders and investors, and they've just provided all their little bits and pieces of information and pictures. A lot of this stuff you can get from Google, but or books or YouTube, but you got to be careful, because sometimes they with clickbait, or maybe they want to only tell you what they want you to know. And so, but I have uploaded several of these. I'll show you. For example, did you didn't get all the economic reports from last week?
I usually look through.
Not economic reports, the economic cycle stuff.
No, I've seen you share it before. I'm just not. I wanted to, I guess, understand more in depth into it before.
Oh, okay. Yeah, I would probably do more research, Google, do YouTube, and get a variety of different people's perspectives. That way you can grab bits and pieces from everyone, and that's what a neat thing about our group is and social media is about. That way we can learn from each other, and because every person specializes in something different, and that way we can grab and take little bits and pieces and kind of create our own strategies and ways of doing things. That way we can then share that knowledge and to help each other out, because karma plays a big role in this. If we help people, karma is going to help us out with this, and it just helps our little cycle.
Thank you.
Yeah, absolutely.
So I'm sorry, before you move on, I'm sorry.
No worries.
I just had a quick question.
Sure.
I just made about $11,000 on a couple of days, and I want to know, what would you guys do? Would you guys just put a loss stop, or do you just sell and wait, hopefully it crashes, then you buy again?
So a lot of people, definitely have different strategies for things, but there's always got to be a primary strategy, and that's why I highly encourage people to do a straddling strategy as a primary strategy, because and regularly I'll put $20,000 on like Amazon calls, another $20,000 on Amazon puts. So I'll be straddling $40,000 on that, maybe another $20,000 on Tesla calls, $20,000 on Tesla puts. Same thing with Apple. So I'm usually about $100,000 in every single day. And so, but the idea is to try to double that every week, and keep it going. But then you have an area where you kind of put your gains in, heavy in, and that could be cryptocurrency. That could be on different segments of the stock market. Like for example, I have several million in energy. Well, I just took it out not too long ago and put it in cryptocurrency. And the reason why I did is because cryptocurrency, well, as I mentioned before, there's a lot of cycles for things, and cryptocurrency has a 4-year cycle. And I'm going to show you, I'm going to upload it here really quick, but I'm going to show you exactly what that is and what it kind of looks like. And that way, because again, a picture says 1,000 words, and so this is kind of where we're at here. So I'm going to blow this up here. So the 4-year cycle looks just like this. Cryptocurrency does just like this almost every single 4 years, and so the sidelines are the end of the 4 years, but then we have the little fainted lines in the middle. Each one of these represent a year. Well, because there's an event called Bitcoin halving. It takes place every 4 years, but cryptocurrency always follows this event, where every 4 years they subtract Bitcoin out of the system, but they leave the dollar amount there. But people want to take advantage of this opportunity, and they invest more money into it. So really, Bitcoin and many other cryptocurrencies usually quadruple every 4 years. So after the Bitcoin halving event takes place, usually for the next 12 months or a year and a half, the price goes up. But once it reaches a peak, then for 12 months or a year, it begins to fall down. But the bottom is usually the previous cycle's what would you call it? The high point. So but then it begins to kind of stabilize right in the middle. So for right now, we are right in the middle of the cycle. We just entered a new year. We're in the accumulation phase. So the bottom pretty much of this cycle is right here. So for example, Bitcoin was right around $16,000, $17,000 or $18,000. That was the previous cycle's highs, because the previous cycle, the lows was $3,000 and the high was right around your $16,000, $17,000. So within this cycle, the highs was right around $60,000 to $70,000. So that was the high point here. The low point was $16,000, $17,000. So the middle is going to be right around $40,000. So that's probably where we're going to see Bitcoin get up to this year. But once it gets to 40,000, it's going to kind of stabilize around 35, 30,000 until the cycle recirculates itself back to. So the next Bitcoin halving event takes place in mid of 2024. So it's gonna look like this. So mid 2024 is gonna be right here, and then it's gonna go up. So 2025 is gonna be right here, and then throughout 2005 is gonna do this. So 2026 is where it's gonna peak at the right before 2026. But 2026 is going to be the bear market for crypto. So that means we need to get out of cryptocurrency right before 2026. And
wow. Thank you. Well informed. I really appreciate that.
Yeah, I mean, the timeline, everything is scheduled to happen. It is inevitable that Bitcoin will reach $1 million. It's not a matter of if, but when it's going to happen. But as long as we know this cycle, and I'll show you the rest of this has been the existing of the Bitcoin halving event. Bitcoin used to be a penny. Can you imagine owning Bitcoin for a penny versus where it's at now? But every 4 years. Now,
wow.
the creator of Bitcoin, he wanted to ensure that it was always going to appreciate no matter what. But I mean, how do you get something to appreciate that doesn't exist? And that's when he created this Bitcoin halving event, because it automatically subtracts about half of the Bitcoin out of the system, but it leaves a dollar amount there. So if they leave the dollar amount there, it doubles. But then you have more people that want to take advantage of it, and they put their own more money into the system, and then boom, it just skyrockets. And so every 4 years, it repeats itself. And it is scheduled to do this for 130, 150 years until it runs out, and then it'll maximize. So that's definitely not going to be in our lifetime. But so that is why it's important that we know what's going to happen before it happens, so we can always move money around. So we're always consistently gaining no matter what, whether it's in the cryptocurrency, whether it's in certain stock segments, but with the gains that we do make, it's important that we always park our money somewhere. But our major plays, our active plays, are always going to be our straddling. So again, we always straddle heavy on our top, stock options, which are going to be our Tesla, Apple, Amazon, and you could do some light ones on the 4th and 5th place, which right now it's been Netflix and Nvidia, but it's always going to change. It's always going to be something different. So those could be kind of like a type of lottery. type of play, but also other lottery plays could be like the earnings, that we kind of went over. Always look for ones that are anticipated with big movements, like for example a Tesla. The option traders are pricing in around a 9% price movement in either direction, even though investors are very bearish. 37% expecting an earnings beat. Tesla and Elon Musk, they're very, very good at overcoming obstacles, and and so that's why we want to be prepared by always straddling no matter what. So hopefully that makes sense. Any other questions?
It did. Thank you.
Yeah, Carlos, I'm curious. Are there, will there be a case where a ticker that's in the top 3, you would still skip straddling? For example, if it was too extended one day, going the opposite direction of the market or something, would there be something that would make you say, I'm not feeling this top 3 ticker for tomorrow?
If it's earnings, like for example Tesla, I'm not going to invest heavy on Tesla because that's considered a lottery play at that point. So I'm mostly going to go heavy on Amazon. Second, I'm going to be Apple, and then I'm going to go a little lighter on Tesla than normal. I may look at some other ones that may provide some good opportunities, as well as for example, if we wanted to avoid that implied volatility crush, we can try to find its next door neighbor, a company that's very comparable that will also be affected by the competitor's earnings without actually having its earnings. For example, American Airlines is scheduled to have their earnings report for Thursday morning. We can look at other competitor stocks like United Airlines, because United Airlines, I think, already had their earnings last week or two, and so that will also be affected by American Airlines. So we can always look at it that way. And if you're not sure exactly what its neighbor type of stock is, you can always ask our group or in the chat room, and then we'll have people. The neat thing about our group having 250,000 members is that we have people that work for every one of these companies. So if you ask a question about a company, most likely one of those employees are going to come out and they're going to let you know some inside information. Our group is such a phenomenal essential tool to use for your advantage. Any other questions? Everything makes sense?
Carlos, I have a question.
Sure.
The question is like, when I see that 1 minute chart and 5 minute chart, so actually from straddling, so 5 minute chart is lower than 1 minute chart. So when acting is going a little bit up in 1 minute chart, 5 minute chart is not even moving right now. So if I wait for the 5 minute chart, so 1 minute chart is like already up, and so I actually losing the opportunity to get entered that time. And so what you suggest for this?
Well, again, one of the best ways to try to be prepared is to try to go into the day that's scheduled to have volatility. If you go into a day that's scheduled to not really have volatility, I mean, we are chancing it to where there isn't going to be any movement, and so we could either be at a wash or maybe at a slight loss. And that's why we have also guidelines to try to be out within the first hour. If nothing's going on within the first hour, most likely nothing's going to happen at all. Or maybe there's an economic report that's scheduled to be released after 1 hour. So we can also wait to determine what that is going to provide. If it doesn't provide anything after that, then we know that the strategy at that moment is invalid, time to get out and to try again later on. So we get back into our straddle within 15 minutes before close and to repeat the process, because it will work as long as you're consistent, as well as following the guidelines it will work a majority of the time. But again, there will be some days where again there's not going to be any movement, and you don't want to be hopeful or optimistic. Think, well, maybe if I just hold on a little longer, maybe something's going to happen. No, if nothing's happening within that first hour, most likely nothing's going to happen at all. But by utilizing moving averages, it does provide us these crossover signals that can help provide us information on whether it's trending upwards or downwards right at opening. And so by comparing the two, the 1 minute chart and the 5 minute chart, sometimes one speaks louder than the other. So we want to listen to both of them to determine what exactly is kind of going on. Next to the MACD chart, both the moving averages and the MACD are the most commonly used indicators by professional traders and investors. So it's only important that if they're doing it, that we must do it as well. And so, and it's important to make sure that we see the pre-market and after hours information on there, because it really just helps provide more information on the trending direction. So usually when the stock market opens, or right before it opens, we can see that it picked a downwards direction here and here with the 5 minute chart. Though it seems like it makes better sense within the first several minutes using the 1 minute chart, because that's more volatile. So as the stock went down, we can see that the MACD was starting to weaken, and the MACD two moving average price lines has crossed over each other. They're telling us it's getting ready to trend upwards until further notice, and then the price lines have crossed over, letting us know it's starting to trend upwards as well. And so that is an indication to get rid of our puts and to hold on to our calls, and so until further notice. So basically didn't cross over until up here, telling us this is a good area to sell our calls. Or if we're listening to the 5 minute chart at that point, it's saying no, hold on your calls. And then it went up another amount up here, and then it crossed over here. That's when we could have maybe got out of the calls, but it bounced back up after maybe some news or whatever. And that's why it's also important to know what's going on with the White House and the president, because usually around towards closing time, that's when it can provide more volatility. Because again, the first hour and the last hour of the day are the most volatile times of the day. And again, the government schedules these times purposely to create more momentum. And so the morning is the economic reports. In the evening is the White House and the president events, their scheduled events. And if you Google, the president's schedule or Joe Biden's schedule, you should find this page that's like fact-based with a period in between the SE and the BA. But it's definitely a page you want to bookmark, because it does refresh itself every 24 hours. And so it updates about every midnight Eastern time or 9 p.m. Pacific time. So if you're on the West Coast, that definitely provides us an advantage. Like I'm in the Seattle region, so I check this every 9 p.m. Pacific time because that way I'm always aware of what's scheduled to happen the next day. Now, unlike the economic report, which is scheduled weeks in advance, the president and the White House schedule is so busy because things change all the time that they release their schedule the previous day. And so we can see, like for example, on Friday, if we scroll down, there's usually a couple things that we need to look for. We need to look for the press briefing, which is also in this little green little color. This is the White House press, the press conference. And this is where we have journalists looking, watching, asking questions. The news is going to be on there. Well, all of a sudden, we start getting these news alerts after all this stuff has happened. After the economic reports have been released, all of a sudden we start getting these news alerts. We're checking these news, and all of a sudden, the stock market has already taken effect within minutes or an hour. and that's why we do not rely on the news applications for alerts, because we need to know what's going to happen before it happens. And so so we see that there's a press conference, a couple hours before closing, and so that's when we know that it's going to provide some kind of volatility. And so as we're watching, and listening to these live, events, we can determine if it's going to provide bearish characteristics or bullish characteristics. So as soon as the event happened, we can see the big dip, and all of a sudden recovered, and that's when we know, okay, it's going to provide bullish characteristics throughout power hour. Because if it's going to provide bearish characteristics, it would have already continued to go down for the rest of power hour. Because maybe something was said during the press conference that investors don't want to hear. Maybe they were talking about possible World War III or something that can really have a major effect on our world economy or on our economy. But as long as they're not talking about anything major, then they're like, okay, let's continue pumping up the market, and then boom. And that's why it's important to always know what's going on before it happens. And so again, this is like our radar. This is all of our little system to figure out what's happening. That way we're always aware of the situation in the market, and the status, and all this stuff. So hopefully this makes a lot of sense. Anybody else have any more questions? The more you learn, the more you earn. I just recently, so on our top area here, we have our normal discussions, featured reels. Reels is kind of a neat little like short videos, like a TikTok thing, which is kind of a new thing here. Remember, files. So I wanted to kind of go over that. This is kind of an area that over time we have accumulated some like PDF, like ebooks. But I definitely do to add more.
Sir?
Yes.
I'm sorry, since you did ask if we wanted to add anything else, I kind of do.
Sure.
I want to know, does everybody know how to process puts and calls? Like you said something earlier that was very interesting. You said you can make money while the market goes down. You can also make money if it goes up.
Yes. Okay.
And I'm kind of new to it, so I just want to know what's the best way or website, or do you happen to have this on your YouTube video?
Well, because that's the way we do these meetings. I mean, we have a lot of videos now that we've accumulated over time. But let me show you something here. I gotta upload it.
So I can't see you, unfortunately.
You can't see the screen yet? Oh man.
No, I did everything you told me to do.
It's still not
refresh, got out, went back in.
Okay,
but that's fine.
What chat room are you in? That I can send
from Messenger.
Yeah, in one of our chat rooms. What chat room are you in?
I just clicked on the link that was posted on Messenger.
Yes, but what's the room name? And I'll upload some pictures to you.
Oh, okay. I'm gonna go check it out.
Yes. Okay.
I think it's room 1. I can't see it either.
What room though? Like, options room 1? Or are you in options room 2, or are you in one of the learning centers?
Learning center, room 1.
Okay. So I'm gonna upload some things there.
I'm in room 2, learning center room 2.
Okay, I will upload both there. Give me one moment. Okay. So with room 2, let me see here. Okay, so I uploaded both room 1 and 2. So this is just kind of an example. So a call is to bet a stock goes up. A put is to bet against the stock, betting it goes down. So that's very important to know the difference between the two. So if you get a call, you're betting it goes up. A put, you're betting it goes down. So this was Alibaba several days ago. Alibaba was up 13%, but it doesn't matter whether it's up 13% or down 13%. But betting that it went up, like it did, the call, you would have gained over 700% on that side. But if you were betting against it with a put, you would have lost 96% because you can only lose what you put into it. So you can lose 100%, but your gains are unlimited. It can be whatever. But if we're expecting a significant amount of volatility, your gains on one side will outwash your loss on the other side. And that's why it's
So that's how these guys are making so much money.
well, yes, or it could be a new guy, just maybe he's getting lucky. Maybe he's picking one direction. I do not recommend that because eventually your luck is going to run out. You're being hopeful, but it's just not going to work. You know, when we're in the bull season, we'll see a lot of people betting the calls. You know, they're and because it's during the bull season, it's very easy for a lot of people to make money. You'll see a lot of people, I'm a pro trader or whatever, but they're not. Once we get to a bear season, you see a lot of people quitting. You see a lot of people losing a lot of money, and because their one-way road strategy is no longer working. No, we need to, if we're straddling, we can adjust to any situation no matter what, whether the market's going up or down. This is a strategy that we can benefit year round no matter what's going on. Even if
so you can bet on both at the same time.
Yes, and it sounds like it's conflicting.
Oh, wow.
You know, for even myself, when I started trading for years, I had no idea that you can do this. I thought that maybe you can only pick one or the other. Well, within our chat system, we always have new, pro traders and stuff that, specialize in something different. And so, so one of them said, I always straddle. I don't do anything else. I straddle SPY, or I always straddle Apple or whatever, and I'm like, wow, there must be a reason, and when you dig into it more like this, it just makes more sense that this is the best strategy, especially when you've gone through catastrophic events. Like, for example, if like when Donald Trump was president, he tweeted that he had COVID, the stock market had dropped like 5%. It was like catastrophic. We were all expecting it more bullish characteristics. Well, it was catastrophic. Or if there's a war, or like a Twin Towers got hit again, something unexpected can easily change a green day into a red day, or a bullish time into a bearish time. So anything can happen, but if we're straddling, we're covered. This is like an insurance play. It is a low risk, high reward situation, especially if we're going into a day that's expected to have a lot of volatility. But with an earnings play, as long as we are expecting a lot of movement in either direction, like with Tesla, whereas we're expected to see 9, maybe 10% price movement in either direction, straddling, even if it's a lottery play, each side's going to get crushed a little bit. We may not make 700% on one side, but it may be half that. We may make 300% or 400% on one side and lose 96% on the other side. That's still worth it, But that's,
I agree.
Yeah. So hopefully, that makes a little more sense. But just know that call is betting the stock goes up, put is betting against it. You can buy and sell them just like you do shares. You buy and sell them. Most people will buy these individually. Some people will try to configure their application so it buys a straddle at the same time or sells a straddle at the same time, meaning the calls and the puts. But as you get more of a seasoned investor and trader, or like a veteran trader, like you've been doing this for a while, eventually you're going to want to buy and sell them individually, because now you can buy and sell them at different times, maximizing your gains on one side while minimizing your losses on the other side. But for now, as you're getting used to it, you'll want to buy and sell them all at the same time.
Yes, sir. Thank you so much.
Yes, yeah. Hopefully that makes sense. And as I mentioned, that I'm trying to upload more books and reading materials for you guys. That'll be under our files area. So if you guys like books, you guys like reading materials, I think you can upload them to yourself if you have something feel free to do that. But I just uploaded the Day Trading for Dummies right here, the Rebel's Guide to Trading Options. There's also, people were asking a lot about dividends, so I just uploaded a dividends book. You can feel free to click on it, and it'll appear. You can download it to your device. That way you can look it over and whatnot. So that way you can. But if you have a request, if you're looking for a particular book, I may have it. I just haven't uploaded it yet, and that way I can expedite that process for you.
Sounds good. Thank you.
Any other questions? Everything makes sense? You guys ready to rock and roll?
Ready.
Nice. All right, guys. Well, thank you very much for showing up. We're going to do this again next weekend. You guys stay safe, make good choices. Any questions, don't hesitate to let me know. Thank you, guys.